Every once in a while, a number comes out in the world of finance that just makes everyone stop. And we just got one of those numbers out of India. And let me tell you, it is a big one. We're not talking about a number that just met expectations. It absolutely shattered them.
So here it is. For the most recent quarter, India's economy grew by a staggering 8.2%. Now, to put that into perspective, this officially makes it the fastest growing major economy on the planet, and it's still picking up speed. But you know what? The real story here isn't just the number itself, it's how it left every single prediction in the dust.
I mean, look at this. The folks whose job it is to predict this stuff, the top economists and analysts, they were expecting a solid but, more reasonable 7.3%. The actual number, 8.2%, wasn't just a little bit better, it was a massive, massive surprise. So you gotta ask, right, how did everyone get it so wrong? And what's really going on under the hood with this incredible number? Well, that's exactly what we're gonna unpack. All right, so let's dig into this headline figure. This 8.2% jump is what they call a six-quarter high. That means the economy hasn't grown this fast in a year and a half. But what's really wild is the pattern here. And get this isn't a one-off. It's the fourth quarter in a row that the growth has surprised everyone like this. Something's definitely happening.
And of course, a number this huge gets noticed all the way at the top. Prime Minister Narendra Modi called the growth very encouraging, and he pointed to the government's pro-growth policies. So yeah, this isn't just some dry economic stat. It's a major headline with real national importance.
Okay, before we get into the nitty-gritty of where this growth came from, there's a quick but really crucial thing we need to talk about. GVA. It stands for Gross Value Added. Just think of it like this. GVA is the pure output from all the different parts of the economy. Farming, factories, services, the whole shebang. Then you add in taxes to get that big GDP number everyone talks about. So if we want to find the real engine behind this boom, we've got to follow the GVA. And that's exactly what we're going to do right now. We know the what, that 8.2%. Now, let's find out the where. Which parts of the Indian economy were firing on all cylinders to make this happen? Time to pop the hood and take a look.
Wow, okay, this chart lays it all out pretty clearly. Look at that tertiary sector, that's services, growing at a massive 9.2%, and the industrial sector right behind it at 8.1%. Now, the primary sector, agriculture and all that, did fine, a solid 3.1%. But it's crystal clear where the real action was, industry and services. We're talking about an economy running on its most powerful, modern engines.
But here's where it gets really interesting. Let's zoom in on manufacturing. Just a year ago, this sector was kind of limping along at only 2.2% growth. This quarter, bam, 9.1%. It just exploded. That's its fastest pace in a year and a half, and it's a huge reason we're even talking about that 8.2% number today. And it wasn't just manufacturing having a moment. That huge services number we just saw, a big part of that was financial and real estate services, which actually cracked double digits, 10.2%. So what this tells you is it's not just about making physical stuff. All those high-value services that are the bedrock of a modern economy, think banking, property, consulting, they are absolutely on fire.
All right, so we've seen which parts of the economy are booming. That's half the puzzle. But the really big question is, why? What's the fuel in the tank? To figure that out, we've got to flip over to the other side of the equation, demand. Let's see who is doing all the buying.
And it turns out it was kind of like a perfect storm of positive factors all hitting at once. First up, private consumption. That's just regular people like us buying stuff. Was up a really strong 7.9%. With inflation being low, people just had more money to spend. Then you have the government, which cranked up its infrastructure spending by a massive 31%. Plus, we saw demand from rural areas bounce back, which is always great to see. And finally, there's a little bit of a technical one. Exporters were rushing to get their goods out the door before some potential U.S. tariffs hit, giving things an extra little push. Now, this all leads to a term that sounds super complicated, but it's really important. Gross fixed capital formation. Don't worry about the name. All it really means is investment. Building new factories, buying new machines, that kind of thing. And it grew by a very, very healthy 7.3%. And here's why that matters so much. This boom isn't just about spending money today. It's also about building the foundation to grow even more tomorrow. Okay, so we're going to change gears here a little bit. Because you hear 8.2% growth and you think, that's amazing. It's good news for everyone, right? Well, not so fast. For the actual businesses on the ground, that kind of rapid growth can feel like trying to drink from a fire hose. It creates a whole new set of very real and often hidden problems. So it makes you wonder, is super fast growth always a good thing? I mean, think about it. If your company isn't ready for it, a sudden boom like this can shine a huge spotlight on all your internal weaknesses. Sure, it's what they call a high-class problem, but trust me, for the founders and finance leaders trying to manage it, it's a massive headache. So, what kind of challenges are we talking about? Well, for starters, your revenue might be soaring, but the actual cash isn't hitting your bank account fast enough. That puts a huge strain on your working capital. At the same time, everyone is trying to borrow money to expand, so it gets more competitive. This kind of success also puts you on the radar of big investors, and you better believe they're going to go through your financial reports with a fine-tooth comb. All your old business plans and forecasts? Pretty much useless now. And at the end of the day, this kind of growth tests every single system and process you have. It's a huge opportunity for sure, but as they say, it rewards the prepared, and it will expose any crack in your foundation. So we've got this insane pace of growth, but we also have these new challenges it creates. What does it all mean for what happens next? For our last section, let's look at how this one single number is forcing some really tough decisions right now. You really couldn't have scripted the timing any better. This GDP number dropped just days, literally days, before the Reserve Bank of India is set to meet and decide on the country's interest rates. This new data just threw a massive curveball into the whole conversation. And this slide right here perfectly captures the massive dilemma they're facing. On one side, you've got inflation at a record low, just 0.25%. Normally, that's a screaming signal to cut interest rates to help out consumers. But on the other side, the economy's already roaring ahead at 8.2%. If you cut rates now, do you risk the whole thing overheating? So what do? Do you help out the consumer, or do you tap the brakes on the economy? It is a genuinely tough call. And that really leaves us with the big question hanging in the air. We now know India's economic engine can run unbelievably hot, way hotter than anyone expected. But the real challenge isn't just starting the engine, it's building the road ahead. Can this shocking boom be managed and turned into a long, smooth ride of sustained growth? That is the billion-dollar question. And it's the story we'll all be watching.